Favorite people. Good morning, Cav. Good to see you. The traveling trader. Good morning, Ron. Great to have you guys today. Guys, let's start with something that's pretty awesome. In case you didn't see it yet, hopefully you did. If you are in Nexgen Pro Trader funding, it is free resets, guys. Today and tomorrow, 100%. Get in there. Hey, what's up, Sergio? So if you guys are working on evaluations, and feel like going for that 1 day pass, leverage hard, over leverage, right? It's free resets all day. Great day to go balls to the wall and get to that semi-live account. Remember that this is an educational room. This has nothing to do with me calling trades, guys. This is 100% me trying to set you up for success by showing you just a simple pattern that you'll be able to prove wins more than it loses. I don't tell you when to enter, why to enter, how to enter. Well, I do tell you how, but you're in charge of it. We're going to talk about NinjaTrader. We're going to talk about TradingView, guys. We have flip-flopped. I do TradingView first now because most of you are on that platform, it seems. So I'm going to give the information there. Then we're going to talk about NinjaTrader. That's the first hour every day. And then we're going to get into just a couple chart reads. You guys present and I give feedback. It's a pretty cool system. Before we do anything, forexfactory.com/calendar, guys. Every morning, first thing, is there high impact news? Is there something going on that could mess up my good time? Is there something going on that could disrupt the market? Is there something going on that could upset the apple cart? And guys, if you are in Nexgen Pro Trader funding, red flag news is prohibited. You can't trade. You're not allowed. Can't do it. There's all the people that lost accounts this morning. So, guys, if you're in that funding company, check news. Even if you're not in the funding company, check news at 8:30 a.m., even though it was a dud. It had the potential to not be a dud. And then tomorrow at 8:30 a.m., guys, they're going to start all over. They're going to do that news. So that's my first stop every day. That's what NinjaTrader looks like. That's what TradingView looks like. And we're going to get into it. We're going to start talking about TradingView. And I'm going to go through a trend trade, guys. This is the, whoops, that's the wrong screen. I don't know why my monitors shuffle every now and then. We're going to talk about one trade using this platform. Just because I only talk about one trade doesn't mean that there is only one trade. I talk about the best trade. I talk about the trade that's easy to go back and prove wins more than it loses. I talk about the trade that gives you something to do as a brand new user that gives you the potential to have more success than failure, guys. And that's what trading is about. Winning more than you lose, putting more into the account than you allow to fall out. We're going to do it with a trend trade. So when we talk about this trade, you've got to learn the rules. Is that better, Pete? There's a reboot. Is that better? I hope. Guys, can you see my screen? Is it just Pete? Everybody else sees it fine? It might not be my feed that's effed up, Pete. So guys, learn the simple rules first. Take all the stress out of your life. Simulate and practice. Post in the room. Do what Miss Lucy just did. Lucy, I know you have to split, so we're going to talk about it. Lucy says, Mark, check it out. The triggers are up. What a wonderful thing. That means that my trend is up. And there's room to trouble. Another wonderful thing. And Miss Lucy, I want you to recognize at 25,401, there's a divergence high. And Miss Lucy says that could stop the market. That could create a bounce. That could mess up my good time. That's where I choose to get paid. Absolutely brilliant. She doesn't jump in up here. She says, you know what? I'm going to follow a pattern. I'm going to let it pull back to an area. There it is. I'm going to let it close above that area, or those small triggers, and I'm going to ride that wave up to the good stuff. And Miss Lucy, this is the perfect trend trade. I'm sorry that's what you're seeing, Pete. I promise you, everyone else sees me fine. There's a good chance that it's you if it's coming through clear for everyone else. There's a really good chance that it's not on my end. I'll reboot it one more time. We'll see. So, Miss Lucy, outstanding. Perfect. Followed the plan. Great job. I know you have to leave, so I wanted to make sure that you got the feedback. Is it starting to feel easy? Is it starting to feel natural? Is it starting to feel like, oh my gosh, this is worth waiting for? Because that's my hope. Because once you guys learn this one pattern, once you get this patience in place, life's pretty easy as a day trader. The hardest thing that you will ever do is sit on your hands and do nothing. I'm going to reload one more time and see if that helps. And Lucy, that is about the most brilliant thing anybody could ever say in my classroom. Waiting for the rules to be met pays off. I hope that got it, Pete. So learn those rules, right? They're not hard. Once you stop looking for the money and you start looking for the rules, good stuff. Practice, post in the room. Tell me what you saw, what you did, where you did it, right? We'll talk about it. Make sure you're trading it right. And then, guys, keep it simple. One of the things that I've already dropped in the room is for TradingView, I have given you the PowerPoint that I'm teaching from. I have given you the TradingView KISS plan, which is designed to optimize your chances of success. Tells you the charts we use, how to read them, a checklist for entry, even tells you where to put stops and pictures of what it should look like. And here's what's cool, is from the plan, that's what a trend trade long entry looks like. That every time. How do I know that? Because Lucy's following the plan. Lucy, I don't know if you knew how brilliant you were, but I'm going to put these two entries side by side. Same market, different times. It's the exact same trade, guys. It's the exact same trade. All this is a pattern. You've got to learn your pattern. I mean, that's outstanding. I can't make this stuff up. This one is trading at what? 25,000? It was trading at 20,000 here. Exact same pattern. Great job. So keep it simple, guys. Learn that pattern. Have a good time. And learn those looks so that they become easy. Your pattern is this right here. Define a trend. Wait for a fight. Hope that it resumes the trend. That's it. You're not in control of whether or not it resumes the trend, but you are in control of everything until you enter. You're in control of whether or not you choose to trade with the trend. You're in control of whether or not you choose to wait for the fight. You are in control of whether or not you choose to wait for the correct entry. And then once you're in, it's out of your hands, guys. So we're trading patterns. We're focused on process, not profits. Profits are a byproduct. They're a result of the execution. So let your execution be flawless. We're going to use two charts to make this trend trade happen. We're going to use a large chart first. It's a big, slow chart. It's going to define direction, momentum, key targets, terminations. It's really going to give you the big picture of what the market is doing. Your 1 minute chart is going to define that fight. It's going to show you where that fight's most likely to go. It's going to give you the ability to not fight the immediate strength against that fight. And it's going to show you precisely where to get in when the fight's been lost. So only two charts. That's all it takes. It's only 3 rules. We're going to get into indicators now. Large chart will have small triggers. That's it. There's actually no background colors on my small chart, on my large chart. There's no large triggers on my large chart. It's 2 little triggers. That's it. Small chart will use both small and large, double the triggers, fast and slow. Your small triggers will show the immediate strength of the move. And the cool thing is your plan keeps you from ever fighting them. The large triggers will be used for what we call a momentum trade. That's the second trade on the plan that I give you. Not even going to discuss it in this presentation. If you wanted to remove those large triggers from your chart and only take trend trades, I think you would be pretty happy. We're also going to use areas and triggers, guys. That's all it takes. Every area has a name. And the one thing that you need to just remember is that these areas can create bounces. That's it. Areas can stop forward progress. And it's physics, right? Equal and opposite reactions. So these are called one-to-ones. They're 100% Fibonacci alternates. When the market is moving up, they behave as resistance. When the market is moving down, they behave as support. These are going to be used for targets, for terminations, and for entries. Divergence highs and lows lets you know there was a loss of momentum at a pivot. These can be used as targets and terminations. Outer bands and mid bands. Outer bands are points of exhaustion in a trend. Mid band is just a moving average right in the middle of a trend. Guys, outer bands can be used as targets and terminations. Mid bands can be used as targets, terminations, and entries. So when I say a target, I mean that you are in a trade and that's where you want to get paid. When I say a termination, it's a line that's been hit that you don't want to trade directly into because it could create that bounce. And when I say entry, I mean you're going to use this area to pinpoint where the small chart is likely to bounce and continue with your trend. So know the usage, how they're used. You've got it in the PowerPoint. You can go back and study all of it. But the only thing that you really need to remember to make this happen, guys, is that any of these lines on either chart can create a bounce. That's it. Areas are bouncy. So let's get through the trend trade. Trend trade, obviously, we have to define the trend first. So I'm highlighting where we are in the rules. There's only 3, guys, only 2 charts. Defining the trend is the easiest task you'll ever have. Defining the trend means that you're looking at the small triggers on the large chart, and they are either up or down. If you can't tell if they're up or down, neither can the people moving the market, guys. There's a fight, there's a transition, something's going on. So when you've got that little could be, I'm not sure. Today is recording, yes ma'am. I'm going to stop it after you leave though, because we're going to talk a little trash about how smart you are so quickly and how frankly it's a little off-putting. Not really. You are 32 flavors of rad the way you picked up on this. So guys, let them be up or down. If you can't tell, or you're like, those could go up or they might go down, it's okay to do nothing. Promise you. Give yourself permission. Once you define the trend, rule number 1 says don't trade into an area because areas are bouncy. It almost seems like common sense, but we're going to make it a rule. So if my trend is up, wherever that market's trading, I need to have room before I hit something. Does that make sense, guys? If you start running at a fence from 10 feet away, you've got room until you hit the fence. If you start running at a fence from 6 inches away, you are at the fence and going nowhere. And that's kind of what this rule does for you. It gives you room to your targets. And if there's something in the way, you simply don't have room to targets. Is everybody good with that? First, it's a trend. And then it's large, then it's room to targets, guys. And if there is none, it's okay to not go to the small chart and look for an entry. Give yourself permission. But if there is room, we're really going to make sure the small chart isn't trading directly into an area. Now, rules 2 and 3 work hand in hand. In order to make sure that you've got room to trouble, you've got to know where your entry is coming from. So I'm going to do 2 things. First, I'm going to show you what it looks like to have room to trouble. From wherever you enter the market, there's not an area in the way. That's it. It's really that simple. If I enter at a pullback at an area, guys, I need to make sure that I've got room before I get to trouble. That's all. So if I enter from this mid-band, I need room to that divergence high. And if I enter at this mid-band, I clearly have nowhere to go. There's one-to-ones right in front of me, and one-to-ones can create a bounce. Is everybody good with that? This is going to be the most broken rule. This is going to be the rule that keeps you upset that you're not in the market more. This is the rule that you're going to try to break, and it's probably going to break you back. Room to trouble is a big part of what we do. So let's define the entry so we know where we're doing that calculation from. When the large chart says up, and when the large chart has room to trouble, guys, we're going to wait for that fight that gets us back to the perfect entry. And your fight begins when the small triggers roll down. So if the trend is up and the small triggers on the large chart are up, the small triggers on the small chart will roll down. This is your immediate momentum, the immediate strength of the market. Once that happens, I'm going to turn my attention lower. I'm going to look for one of those areas, one-to-one, zones, mid-bands, something bouncy. And I'm not just going to jump in when it gets there because I don't want to fight the immediate strength. So I'm going to wait for the fight. I'm going to pinpoint where the fight is most likely to go or where my rules will have to be met. And then the entry for a long trend trade will be a reversal bar up. And you have to wait for the timer to go down, for that bar to finish, for it to close. And both corners of that bar have to close above those small triggers, because this is taking you out of the fight against the immediate strength. This is where the small chart is most likely to bounce and continue in the direction of the large chart. So for a downtrend, it's the exact same thing. The trend is down. We're waiting for a fight patiently. When the small triggers roll, we know that the fight is on. So we turn our attention to areas that are higher. And we don't do a thing until the area is reached, because the rules say, wait for the pullback to an area. That comes before. Look for a close below the small triggers. So first it reaches the area, then it gives a down bar that finishes below the small triggers. Notice the large triggers didn't come into play. This is your entry. This is where the small chart is most likely to change direction and get back in line with a large chart. Your entries will look the same every time. Good morning. Not sure, 10K. Can everyone hear me? All right, guys, so pull it back to the area, get in on the good side, the trade side of the small triggers. So you're going to use that entry, and now this picture makes a little more sense. The trend is down, the small triggers roll, it pulls back to the midband, and I'm saying to myself, when I get a close below the small triggers, do I have room before I hit something solid? And that's going to be your entry. Small triggers roll, pulls back to the midband, and room to targets. So I'm going to ask you guys right now, is everybody good defining the trend? Simply the small triggers are either up or down? You're okay, 10K. Always interrupt, guys. If you need something, always interrupt. I'll do my best to help you. Sometimes we have to send you to tech. 15-minute before I ever get off of that large chart, can't be at an area. Guys, this is a great example of how the triggers are down, and I've got nowhere to go. Do you guys see it? And this means I just have to be patient. I'm literally smack dab in the middle of something that could create a bounce. No reason to even look for the small chart. But when I do have room, I'll go through the entry process, and I'll make sure that from wherever I take my entry, I've got room to make money, guys. And it's going to look like this every time. First, the triggers are up, letting me know that the trend is up. Because there's nothing in the way, I turn my attention to the smaller, faster chart. And with the market trading way up here and I'm feeling left out, I already know where the market needs to return to put me in to my highest chance of success with this trend trade. The triggers are up. There's room to trouble. There's absolutely nothing in the way. Because the small triggers roll down, I am calling my shots. I am demanding that the market come to the area, give me my entry rules, because this is where my highest chance of success comes from. Guys, this is going to create a level of patience that you're probably not used to trying to keep up with fast price action. Triggers are down. There was room to trouble. And when we were down here in the classroom, we drew that box. That's not a picture that I drew after the fact. We literally drew the box, called our shot, and then it was about 10 minutes until it actually gave us the entry. Almost 10 minutes of patience, waiting, doing nothing. And when it finally gave the entry below the small triggers from the area, down it went. Guys, we did the same thing live yesterday in the room. We drew a box around a mid-band. And the market hemmed and hawed for 15 minutes before it got there. And once it got there, a lot of you took pretty impressive winners. So knowing the full concept, room to trouble, define your entry. Don't trade directly into something, guys. It's more likely to kick your ass than not. Triggers are up, room to trouble. Because the small triggers roll down, I look for areas. Entry signal is an up bar from the area with a close above the small triggers. Room to trouble. It's the same trade every time. This picture right here, memorize it. You'll never miss a trade. Memorize it. You'll never trade into trouble. Is everybody good? Can you give me a Y if you're good? Quiet class today. That one went a little faster. We've done 3 days. Rockstar. Now that one's a little bit quicker today. Let's talk about stop placement. So I like creating scenarios in my head, painting a picture, whatever. Guys, an uptrend means that the buyers are in control. That's what's creating the uptrend. The buyers are doing more work than the sellers, and the market is moving up. So the buyers are in control. And we're letting them. We want them to be. We want to latch on to what they're doing. But we need the sellers to fight. And guys, the sellers don't necessarily fight. Maybe the buyers took profits and it goes down. But think of it this way. It makes it easier. The buyers are in control. And then the sellers fight, and their fight takes us to our beautiful entry. And we can pinpoint with the low tick of that push down where the sellers lost, where the buyers took back over. Even if our entry is a couple bars later. Guys, where the sellers fail, your stop's going to go below because that's where they just couldn't push anymore. What a great spot to protect yourself. And then the hope is that the buyers are back in control. So if you're taking a short trade, your stop will be 4 or 5 ticks above the pivot where the buyers lost out. And if you're in a long trade, your stop belongs 4 or 5 ticks below the pivot where the sellers couldn't push anymore. And guys, that's your stop. And now here's something that upsets you guys a little bit. This is where the market should not go. If you jump in way up here because you're indecisive or you think you're going to pull one over on the market, it doesn't change where your stop goes. Your risk is huge. Your profit potential has gotten really small. Guys, great entries create very manageable trades. Great entries make it easier to capitalize on the advantages. Great entries will reduce risk. The further away from wherever that failure point was you enter, the larger your risk is going to be. Everybody good with that? Knowing where to put your stop's a big part of it, guys. And then accepting that if a trade wins 70 to 80% of the time, 20 to 30% of the time, they're going to hit your stop. It doesn't mean you did something wrong. It just means that the sellers were a little hungrier than the buyers right then. All right, let's talk about support and resistance. This is a very important concept for you guys on TradingView, and it's gonna pay huge dividends when you're looking for entries. Anytime the market is moving up, whatever line it hits is an area of resistance. It's like a ceiling. Whenever the market is moving down, whatever area it hits is support. It's like a floor. So just knowing the difference between resistance and support. Well, resistance and support break all day long. The market rarely gets caught between two areas and just pinballs for 36 hours. So as the market comes up, it reaches an area of resistance, and this remains an area of resistance until you get a full body of a bar that closes above. So all four corners of the body of that bar, whether it's a big bar or a little bar, this is when resistance becomes support. Long trades are taken from areas of support. So jumping in above resistance doesn't guarantee that you're in a good spot. It's the pullback to support, the close above. That would be a trend trade. So when a full bar closes above resistance, resistance behaves as support. And when a full bar closes below support, support becomes resistance. And down it goes. So here's some of the most common challenges that I see. You're looking for a long trade. Maybe the close above doesn't give you room. So you say, this bar closed above the area. I'm good. It's clear. Guys, it's not. Until you get a full bar above that area of resistance, all you're doing is trading into resistance. The market is still at that area that could create a big ugly bounce down. If you say, well, price got past support, I'm going to jump in, support never broke. You tried to take a short trade from support. You tried to take a long trade from resistance. And I know this is for some of you like, no, I like that look. That's cool. That's your right. But as the brand new user, as somebody that's in my room, trying to find more success than failure, this look right here, you're going to hear it referred to as the prairie dog, which means that it peeks its head up, it taunts you, it tricks you, and then resistance does everything resistance normally does. So don't get fooled. Let it be a full bar. And as you move forward with the software, guys, as you try to learn these very simple rules, as you focus on this one trade so that eventually maybe you can see more, this is how I need you to annotate your charts when you post it in the room for feedback. I want you to talk about your small triggers and tell me which way the market is trending. Not for me. I can do it in a fraction of a second. I want you to make sure that you're following the plan. I want you to talk about your room to targets, whether or not there's room for you to make any money. I want you to use the phrase small triggers rolled up. So I wait for a pullback to resistance. I take a close below. That's my entry with a reversal bar. And guys, if you do this on your charts, you're going to learn your rules faster, because what you're doing is you're literally talking out your rules every time you take a trade. So right now, my triggers are down. I have tons of room before I reach a mid-band, but the challenge here is that I don't have a pullback to an area yet. And if I did, areas are pretty stacked, guys. And in times of consolidation, you're going to see these stacked areas, and these stacked areas are going to frustrate the hell out of you. But every one of these areas can create a bounce. And sure enough, every one of these areas did. So sometimes it's just not your money. Hang out. Wait a minute. Market trades billions every day. Wow, look at that pretty trend trade. Nice job. All right, guys, so that's TradingView. You have been given the plan. Bum, bum, bum. Let's drop that in there again. There's your plan, designed to optimize your chances of success. I've also given you this spreadsheet showing you what it looks like to have a trend trade, a momentum trade, ideas on management, no more longs, no more shorts, things designed to keep you a little out of trouble. So I'm going to drop that in there as well, in case you missed it the first time around. And then I'm also going to give you the PowerPoint that I use to teach so that you can look at all those pictures and make sure that you have an understanding. Now here's a cool thing that you can do should you decide to do it, is you could open up that PowerPoint and you could look at those pictures, and if anything at all in those pictures, if you have the slightest amount of doubt or misunderstanding, if you require even a skosh of clarity, All you have to do is take a picture of that and drop it in my room and say, Mark, can we discuss? One of the biggest challenges new users have is finding the courage to post in the room and ask a question. If you do, life gets easier. Guys, we're going to trading or to NinjaTrader now, and we're just learning again 3 rules, 2 charts. Let's go figure out how to read our indicators, right? Let's define a trend. Let's wait for a fight. Let's pinpoint where the fight is most likely to be lost, and let's hope that the trend resumes. That's all we do. I don't care which platform you're on. That's the whole gist of it. And here's the cool thing, because I like cool things. You guys are cool things. There's nothing new about this methodology, guys. Nexgen's been around for the better part of 30 years. Nexgen has been teaching trend trades. This is in the 2004-2005 plan. It's just defining a trend, pulling back to an area, defining your entry, and hoping that the trend resumes. Guys, this is over 20 years old. There's a reason we still teach the trend trade, because trend trades work. So learn the rules. That's the most important part. What do my rules say? What do my rules mean? Practice, 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 and post in the room, guys. Hey, Mark, I'm learning to read my indicators. Did I read them correctly? Hey, Mark, I'm working on my entries. Did I enter correctly? Hey, Mark, do you see anything that could have hurt this trade? And I'm going to tell you guys right now, I'm going to tell you when I see stuff that could hurt your trades. Try and keep you from building bad habits. We don't want you practicing the wrong trades. Those little short-term victories typically result in long-term failures. And then keep it simple. I mean, for the love of fuzzy, guys, stop making things difficult. Your NinjaTrader KISS plan, designed to optimize your chances of success, that's it. That's the checklist for entry. 3 things. One of them's optional, but you have to learn that first one so you can take the second one. You've got to learn how to identify the first rule so you can take the second trade. You've got to learn how to identify the second rule so you can take the second trade. Guys, this very simple plan that I'm giving you is designed to open the doors for more. And if you bypass the learning process, 3 advantages: momentum, path, and entry. If you choose to chase the money rather than the process, you're going to be chasing tails for a long time. So only 3 rules. When a rule is true, you have an advantage. It takes 3 advantages to create a high probability trend trade. A high probability trend trade means that each indicator on every chart agrees with the rules for the trade. This is when your triggers are the strongest and you have the advantage of momentum. This is when there are no termination conditions and your path is clear. This is when you can use rule number 3 to define the perfect entry where that fight is most likely to be lost. This is the best of the best. This is a pattern that you'll be able to prove typically wins 70 to 80% of the time. From this comes more, but let's keep it simple. Learn them individually, piece them together to create the trade. It only takes 2 charts to do it, guys. The large chart is the big, slow chart. It's the broad stroke of the brush. It's the overall opinion of the market. It takes 1 bar to define direction, momentum, and areas. Your first 2 rules are met on this first bar, the most current printing bar. And it'll be trading way down here. And the fear of missing out is going to grip you by the throat and try to squeeze the life out of you. Down here is where the fight starts. Don't worry, we're not getting in down here. We're waiting for the pullback to an area on a smaller, faster chart, a refinement chart showing the inner workings of that 1 bar. We're defining our perfect entry, and we're hoping for resumption of the trend. Everything that happens inside of this 1 bar happens in this big box right here. All the bars up, the bounce, and all the bars down. So big picture leads the way. Small picture reduces risk, maximizes profit potential. We're going to use areas. Areas are bouncy. They're horizontal lines on a chart. They all have names. When you reach them in an uptrend, they're resistance. When you reach them in a downtrend, they're support. We're going to use triggers. Now, NinjaTrader's a little different. You'll have small and large triggers on both charts. Your small triggers are two solid lines. They're a fast-moving average. Your large triggers are two dashed lines. They're a slow-moving average. Small and large. That's all you need to know. When they're up, they're green. When they're down, they're red. The same is true for defining trend. If whatever color the background is behind the first bar is green, you're in an uptrend. If it's red, you're in a downtrend. We're going to use trigger lines to define momentum for rule number 1. We're going to use trigger lines to define termination conditions, areas that we should not trade into, per the plan for rule number 2. We're going to use the large triggers to define our perfect entries on the smaller, faster chart for rule number 3. Guys, trigger lines tell the story. And it only takes 3 rules to learn the most wonderful story you could ever learn. So we're going to break these down individually. I dropped in, I think I did, didn't I? Let's do it again. I'm going to give you your tracking sheet, your plan, and your PowerPoint right now in the room. These are the 3 rules that create a trade. Guys, on the spreadsheet that I just dropped in the room, your first tab is the 3 rules in green, exactly what it looks like to have your rules met. We're going to use a method called chunking. If I have strong triggers, my first lesson, my only focus, then I'm going to go learn how to define a clear path. My second lesson, my only focus. And then I'm going to go define my entry. My third lesson, my only focus. And then I'm going to piece those 3 together to create the perfect trade. And I'm also going to learn when not to trade. Because when not to trade is the hardest thing you'll ever do. Strong triggers. Rule number 1. Strong triggers is or is not. Let it be black and white, please. In order to have strong triggers in an uptrend, when the background is green, small and large triggers must also be green. If they're not, if they don't agree with one another in color, or they don't agree with the background in color, you don't have rule number 1 met. That's like a cheat code for you. In an uptrend, small triggers are above the large triggers. Large triggers are widening. We want that mouth to open. And guys, separation is strength. Whether it's a little bit of separation or whether it's a lot of separation, separation is strength. So in a downtrend, small triggers below the large triggers. Large triggers are getting wide. Once again, separation is strength. When I have strong triggers, when I have separation, when the colors match, the odds are favorable for the market to continue in the direction of the trend. It's like a freight train pushing that market. It's the same advantage that allows us to take trades when areas only have the potential to break. It's the same advantage that a lot of guys in this room are going to look to just to kind of jump in and ride that wave. Momentum is hard to stop, guys. But momentum is gone when separation is gone. So if separation is strength, no separation between the small and large is weakness. And weakness is the absence of your advantage. When I have weakness, anything could happen, up or down. It looks like my NinjaTrader crashed. I'm going to pull that back up so we can go find some live examples. So guys, rule number 1 is typically the easiest lesson that you're ever going to learn. Rule number 1 has nothing to do with areas, and rule number 1 has nothing to do with price bars. And rule number 1 is nothing more, sorry, let me get that bumped up, than either separation or no separation. Is everybody good with that? It's almost too simple, right? Are you saying that if anything can happen up or down, I should sit on my hands and wait for a market where I can say that the odds are favorable for it to continue? Sounds silly when you say it out loud. But once you have momentum, man, there's some stuff that can stop a market. We call them termination conditions. Termination conditions, for the easiest approach to it, termination conditions are areas. They're horizontal lines on your large chart. These are areas where the people that move the market are likely to make decisions, where buyers buy and sellers sell, where fights happen. Areas on a large chart are where the controlling force is most likely to make decisions. So what we're going to do is first we're going to learn to define a termination condition. We're going to learn to sit on our hands, to do nothing, to not take that next trade because our advantage is gone. And from this one lesson springs all the other lessons that sets you up for the next trades. It keeps you patient, gets you to the next trade on the plan, guys. So to define a termination condition first, we have to allow price to reach the area. We have to let the Renko bars hit an area of resistance. Remember, that's a blanket term. That could be a divergence high, 1-to-1s, red fib, or it has to reach an area of support. And when price reaches an area of support or resistance, all you have to do is ask yourself out loud, scare the dog, where are my triggers? And if all four of your trigger lines, both small, both large, remain below an area of resistance, an area of resistance is a termination condition. And all it says, Rule 2 says, don't take a trade into the area. So if you take a trade on the way to the area, it's not a termination condition. But if you take a long trade after it's been hit, you've broken rule number 2. If you take a trade on the way to support, it's not a termination condition. If you initiate a trade after it's been hit, you've broken rule number 2. Does that make sense, everybody? Rule number 2 is the absolutely positively most broken rule, because if you didn't catch a long trade on the way up, the fear of missing out forces you into bad decisions. And if you didn't make any money on the way down, you start to believe that the market owes you. So guys, price reaches, we're done with price. Start counting trigger lines. Trigger lines will tell you everything that you need to know about that line. It's either going to break, like it did over here, or it's going to stop the market and reverse it, like it did up here. If it's going to break, there's a sequence that happens. First, price reaches and no triggers break. 0, goose egg. That's a termination condition. Absolutely no trades into that area. You don't have an advantage. More often than not, it will result in a loser if you initiate a trade. Now here's a little bit on those triggers. If one of the trigger lines, like the small triggers, gets through, it's still a termination condition. Your trigger lines are like a car, and if both parts of the car don't get through the wall, that car didn't get through the wall. So you might see a time where one of those lines gets above, it's the exact same as 0. If 2 trigger lines, it'll typically be the small. Well, it would have to be, because momentum is in play from rule number 1. If 2 trigger lines get above that line does have the potential to break with that momentum, but this is not your best look. This is not a look that optimizes your chances of success. This is not the highest potential for that area to break. When 3 trigger lines get above that line, 1 large and 2 small, we call this a 50-50 look. 50% of my triggers are through, 50% are not. When that third line starts to get north, guys, this is the second trade on the plan that I gave you. This is the potential for that area to break. This is where the area has a higher chance of that breakout. There are some very specific rules to take advantage of this trade, and you're going to find that this is probably the majority of your trades. But you do not have a high probability trend trade until all 4 trigger lines break through that area. Now that area that was once a problem, that area of resistance has become support. Your path is now clear. And with all of that momentum, you're going to go look to define your entry. So there's 2 ways you can get that clear path. From a breakout, we just went through it. All 4 triggers get above those areas of resistance. Those areas of resistance become support. With momentum, we're good to the next line. And once we hit the next line, we start the count over. Or you can get a clear path from a reversal. Guys, the moment the triggers turn, your path is clear down because price hasn't reached an area. Resistance did its job, and your path remains clear until you find that next line. So the easiest trades that you'll ever take, and this high probability trend trade. Oh, right on, Ron, thank you. This high probability trend trade means that you have separation, that all 4 triggers are above from a breakout, and you're going to define on that smaller, faster chart that pullback to a Fibonacci area of support to enter the highest probability trend trade possible. When it comes from a reversal and you have momentum, the path is clear. You're going to pinpoint an area of resistance inside of those large trigger lines, and you're going to take the highest probability trend trade ever. These will be the easiest trades. These are not the most often trades. But this is the trade that teaches you to focus on advantages. This is the trade that gets you to latch onto momentum, that gets you focused on a clear path. This is the trade that sets you up for success, guys, and opens the doors to see more. And those first 2 rules, once you learn those first 2 rules, you have everything that you need to be a successful trader, to build a different plan, to find more ways to take advantage. Momentum and path lead the way, guys. Momentum and path set the story. They get you where you need to be. Your entry is specific to the trend trade. Nexgen on our website has high volume area trades that allow you to catch tops and bottoms. They have momentum based trades. Some of you take what's called the chili dog, where you just jump in with a clear path and momentum. Guys, there's a white bar breakout trade, and all of those trades that are beyond this one will go back to these 3 things. You can't take a momentum trade without momentum, so you have to learn this. You can't buy a top or a bottom, buy or sell a top or a bottom, if you don't know that it's already terminated the market, right? And those entries is developing patience to wait for the best of the best. So let's go define the perfect entry. With momentum, with path, we're going to use a limit order to buy or sell a pullback at an area inside of triggers, guys. It is a mouthful, but if you learn this phrase, you'll never miss your trade. You'll never wonder where it's coming from. You won't hesitate, and you'll literally wait for it with a limit order. I believe language is important, guys. Learn that separation is strength. Price reaches no triggers, no trade. Use a limit order to buy or sell a pullback at an area inside of triggers. Once you learn these concepts, guys, life becomes easy. And your entry is a pattern. That's all it is. It's going to look the same every time. When the large chart is up, when the path is clear, you're going to wait for the fight. That's the reversal bar. Begins the fight on a Renko chart. The reversal bar is not your entry. No worries, Ron. You'll define the retracement zone where the market is most likely to push down, somewhere from the top to the bottom of these large triggers. You've got 2 large triggers on your entry chart. It's just one from the small chart, one from the large chart, guys. Price returns to triggers. So somewhere from the top line to the bottom line is where the market's most likely to retrace. The triggers aren't bouncy. Your entry will come from an area inside of triggers. Buy or sell a pullback at an area inside of triggers. Learn the phrase. You will have a limit order waiting at the highest point of support, knowing full well that it could go to the lower point of support, knowing full well that it could go to the bottom of that retracement zone. But because for brand new users, we don't want you overthinking or second guessing, you're going to activate a limit order at the top, at the highest point of support to that reversal bar. And you're going to just say, come get me. And if they do, you're in the highest probability trend trade ever. And here's one of the things. If they push through your entry a little bit, don't panic. You're still in the retracement zone. And if they get to the next area, don't panic. Rule number 3 is still helping. And if they get to the bottom of the retracement zone, it's okay. The advantage of rule number 3 has not left the building. But it has 5 ticks below those trigger lines, guys. And 5 is a kind of an arbitrary number that says these are averages. Let me give it a little room to breathe. Because you can define where the market is most likely to continue and bounce in the direction of the trend, you have also defined where the market should not go. And absolutely no trades are taken from the wrong side of the triggers. I don't care how many lines you have. Because once you get below those triggers, guys, you don't know if, when, or where the market is going to continue up. The advantage is gone. Rule number 3 is no longer in play. A lot of losers get taken. Well, I thought that it would hold. It should hold. It has to hold. I know it's not inside of triggers, but I've heard all of them. It doesn't change the fact that this is an avoidable loss. So by defining where the market is most likely to continue, you have defined where the market should not go. Your KISS plan tells you this is where you will cut ties with that trade and accept the loss. It's a cost of doing business. So when the trend is down, when the momentum is strong, when the path is clear, did I mention that? When the trend is down, when the momentum is strong, when the path is clear, there's such an easy recipe to define the best of the best. You're going to wait for the fight. The reversal bar, it's not your entry. Just a little loss of momentum. Hopefully that's going to take you back to the area inside of triggers. Your entry is just below the lowest point inside of those triggers. And guys, this is where the magic happens. And as long as they're in that retracement zone, we're solid, we're good, no worries. And you will see trades go into negative equity. Probably every trade you will see go into negative equity at some point. Anything beyond those triggers is not a part of the entry process, guys. This is where the market should not go. This is where the advantage is gone. Your KISS plan says that your initial stops are placed about 4 to 5 ticks beyond those triggers. And guys, anything that wins 70% of the time is obligated to lose 20 to 30% of the time, which means this is okay when the rules are met. This is a good loss. This is all right if all the advantages were in play. This is a good loss. But the KISS plan also says that if you get a reversal bar in the direction of your trade from the area inside of triggers, you can reduce your risk 2 ticks above it, 2 ticks below it. And I'm going to tell you right now, it's not uncommon to see you guys post in this room buying and selling the high and low ticks, having 30 or 40 bucks worth of risk on a trade once that reversal bar prints. I've even seen you guys take profits. The KISS plan says get paid at $100. I've seen you guys take profits before that reversal bar ever prints. So great entries, once again, create manageable trades. It's imperative that you learn the pattern. If the trend is up, I choose to look for long trades. That's the first thing, just commitment to the trend. If my triggers are strong, and only if my triggers are strong, I will make sure that there are no termination conditions. So I just look at wherever the market is trading and I say, wow, price hasn't reached an area. I've got room to trouble. And I will look back. My triggers have gotten above the resistance line. I've got a clear path. And then I just wait for the fight, guys. Here's my reversal bar. I know exactly where they're likely to retrace, exactly where they're likely to bounce. And I'm just waiting there with a limit order. And I'm just telling them, come get me. And if they do, and here's the cool thing about the methodology, is the market's up here when you make that decision. And there's not a lot of room to trouble. The market's down here when the entry rules are met. And there's plenty of room to make money. And if I wait patiently for the perfect entry, I have the least amount of risk. And once it starts to go, I have even less risk. And your KISS plan management probably has you out for $300 long before it ever gets to anything that could create a bounce. That's the most basic way to use the software, guys. And trading is patterns. Trading is repetition. Trading is doing the same thing every time, focusing on the execution of the method rather than worrying about the profits. So as a brand new user, what you can do is you can say, you know what? I'm going to focus on momentum and make sure that it's always present. I'm going to demand the clear path as a brand new user, understanding fully that I'm going to grow beyond that. And I'm going to pinpoint my perfect entry. And you know what? I'm going to take maybe 7 to 8 trading days to only focus on that KISS plan best of the best high probability trend trade. Because once I train my brain to speak in terms of advantages, I will easily recognize when one of those advantages goes away. And I'll be able to say to myself, as a little more experienced user, just because one goes away doesn't mean that I can't find a way. It just means that it's no longer high probability, that now it's medium probability. And a medium probability is defined. Here we go, some technical jargon. A medium probability trade is defined as a trade where most of your indicators line up for the trade. However, a small issue exists. Your small issue will be that 33%, 1/3 of the good stuff that gets you into a trade is gone, which means that I'm going to manage it a little more assertively. I'm going to maybe take profits a little quicker. I'm going to get to break even just a wee bit faster, understanding fully that this isn't the best of the best. But guys, the majority of your trades will be medium probability trades. And if you don't learn the best trade, you may struggle. Now, here's the cool thing, and the part that's always my wish for you guys, is you'll also be able to look at your chart and say, son of a bitch, 66% of the things that I hold dear to my heart have left the building, are no longer in play, aren't helping this trade. I have to define this as low probability. And guys, when you define this as low probability, there's going to be this part of you, I hope, that says, you know what? My rules are too freaking good. I am perfectly happy doing absolutely nothing. I don't even need this nonsense in my life. There's too much money to be made with these two options. It takes a little bit to get there, because in order to avoid low probability trades, you've got to learn how to deal with FOMO, the fear of missing out, right? But you'll get there. You're in control of the entries, my friends. So knowing what's working for you and against you allows you to make good decisions on whether or not you'll enter that trade. Knowing what's working for you and against you gets you set up to know how assertively or aggressively you may need to manage that trade. All of you in this room, I don't care where you're at in your trading, all of you in this room have everything you need to be successful now. Everything that you need to be successful now. And this plan is a stepping stone in your learning journey. When I say that, what I'm talking about is you're going to see more from the basics. Trades are designed to optimize your chances of success, which means that Nexgen has spent tens of thousands of pictures and hundreds of hours developing this methodology to give you the best of the best. And here's the part I want you to all believe. You will craft a plan tailored to your personal goals based on your ability to read the indicators. And until you can read your indicators, it's okay to let it be two charts. It's okay to let the rules be met where they're designed to be met. It's okay and probably encouraged to use a checklist, to be that demanding that the market give you exactly what you need in order to enter. Your KISS plan tells you exactly how to manage it initially as a brand new user, but look at this. You will craft a plan tailored to your personal goals based on your ability reading the indicators. Guys, the management plan and the KISS plan is not the best management plan. It is the one that teaches you how to get paid. It's the one that shows you where to put your stops, to define where the market shouldn't go. You're going to grow outside of this, and probably quickly. That's my hope. But until you can do the easiest trade, the second trade won't come as easy. Because for the second trade, you've got to define a strong top or bottom. And a strong top or bottom means that a no triggers through termination reverses the market. And if you can't calculate how to define a termination condition, you're going to mess up this rule. And the 50-50 trade, the potential to break trade, says that you must have strong triggers on the big chart. And if you skipped that lesson, you're going to break this rule. And you have to have the exact same look, separation of strength on your small chart. And if you don't have this and believe in momentum, your trade's less likely to work. And you can't have one of those divergences. And then when you do get your perfect entry for this trade, you're going to manage it differently, because it's not high probability, it's medium probability. Must be managed a little more assertively. Profits are taken a little faster. The recognition of trouble. Guys, your plan is everything that you need to be successful with this software. Your plan is the best of the best. Your plan is the highest probability. Your plan, the KISS plan for the brand new user, is ideal. Learn the simple rules, post in my room, get feedback, take 1,000,000 pictures, and learn the pattern. Are there any questions about either platform? Price reaches Fibonacci support. The triggers don't break. Weak triggers, the market doesn't continue down. Fibonacci resistance, the triggers don't break. Look at that. Fibonacci resistance, the triggers don't break. Guys, every lesson that we just talked about on the large chart has taken place in the last 12 minutes. And without your rules met, none of you should have lost a dime in that area. Some of you may have found a way to take one of these. Nope. Only one had an area inside of triggers. Did we get any good ones in there? There's, looks like 3 triggers through, possibly. What did it look like on a smaller, faster chart? Looked exactly like a pullback to an area inside of triggers. There's the pattern. May not have been your trade. Momentum potential to break. There's the pullback to the area inside of triggers. Maybe not your trade, but the pattern is true. You could probably find a way to capitalize on that eventually. And guys, you can just scroll back and do that. What's it look like when there's momentum? What's it look like when there's nothing in the way? Well, that area is inside of those triggers, isn't it? Pretty cool, right? Over and over, guys, rinse and repeat. So that's it. Paul, you do Market Dynamics Pro update, the VWAP disappears. Did it ask you to do the update again? Or is that something? Oh, it does, doesn't it? So let's see. Indicators update. Let's see if mine does it. Update this script. Yep, there it goes. Gone. I don't have a VWAP anymore. I should have known better. You just told me. How do we get it back? I don't know. I'm going to F5, and I'm going to do it without saving. Let's see if it comes back. Nope, that thing is gone, Paul. I don't know, brother. Unfortunately, I'm the indicator reading guy. We're going to have to let Chart Prime sort that one out. No, it's there. There it is. I F5'd it, Paul, and it's back. I did it without saving, and it still wants the update. So, or was that? Nope, there it is. So maybe F5 it, don't do the update. Look at us getting smart. All right, guys. So what's our read right now? Triggers are down. I got nothing but room to support. Because the small triggers roll up, the market pulls back to an area of resistance. The market closes below. We are in the middle of a trend trade, my friends. We are in the middle of a trend trade that originated from this bar right here. The initial stop would be up here. The large chart target, should you decide to hold for it, would be down here. Does everybody see it? Trend, fight, entry, resumption. Giddy up. And now we're just screaming, go, 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 go. Does that make sense, everybody? That is a live version. And I'm hoping nobody is listening to me because all of you are in the process of making money right now. That is my never miss. That is my don't hesitate. That is my hell yeah, I'll take this trade no matter what happens because it fits every one of my rules perfectly. And that's hard because it means that my brilliant opinion doesn't get interjected. My amazing gut feelings have absolutely no value in this world. All right, guys, I'm going to click on the charts that have been posted so far today. And we're going to go back to everything momentum, path, and entry. And I'm just going to warn you guys right now, you guys that are doing some crazy stuff because you're on simulator, I'm going to call it out. I'm going to let you know that you're breaking all the rules and probably getting lucky And new users, you're like, well, I thought you weren't the trade police. Guys, I am not the trade police. But this is an educational room. So if you're brand new in here, I'm going to point out what crazy shit looks like. So hopefully new users don't do that nonsense. Because it is short-term victories that are creating long-term failures for you guys. And I have been around long enough to know that these short-term victories create long-term failures for you guys. All right, here we go. Triggers are up. Pull back to an area, close above. So Paul, did you see my feedback earlier? When the bar breaks below, this is now resistance, which means that yes, it did break, but you didn't get your pullback and reversal bar up to close above. So support becomes resistance. Resistance becomes support. This is your pullback. And down here, that's your next area of support for a trade, Paul. So support turns to resistance, back to support. That's where your triggers finally roll. Here it pulls back and becomes resistance again. And that's the only spot for a long trade. And this is where you entered. And it pulled back to support here and created a small loser. And I think that the zone shifted and it pulled back again. And that's the one, close above from support. That's the one that ultimately goes the distance. So that breakout bar above, the rules say an up bar for entry. And if you enter on the breakout, you forgot to wait for the pullback. Does that make sense, Paul? You never let the triggers roll. You never let it pull back to an area of support. And you never got the close above, which means that very simple language might have kept you out of that trade. It's a good thought process. Just a little incomplete. Momentum, nothing in the way. Jump the fudge in, get paid, get out. Guys, this is what they call the chili dog. This was created by Ron C. in the room. This is designed to take advantage of a market that is screaming in a direction with nothing in the way. And that's all it is. JTFI means jump the fudge in. But chances are, Pete didn't say the fudge. He used the F dash 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 word because he's a grown man and he can do that. But he also gets paid fast because he knows that it's nothing more than jumping the fudge in on momentum, and he exits if things start to change because it's not the pullback to the area inside of triggers. That's that little snippet that typically happens before the trend trade prints. Great job, Pete. Nice job. And then 15 is up. There's nothing in the way. It pulls back to support. It gives the most beautiful entry ever. And those sons of bitches stop you out. And then you're like, wait a minute. This is still support. I can still take the entry. And oh, they get so close to your target. And those sons of guns reverse it. And man, Paul, two awesome looking trades. And the only thing missing from this chart is the wins that I wish you would have gotten from following the rules. Sometimes, guys, great trades don't go the distance. Sometimes great trades fail. And Paul, this is a shining example of two great trades failing. Your stop, your target makes so much sense. They just didn't get there. And guys, this is one of the great things I think about posting in the room is there will be times where I will just wrap my arms around you and say, they did you dirty, Paul. Because I can't find anything wrong with these trades. They just didn't work. They just didn't go. The forces that control the market didn't let it happen. Great job. I would take these trades with you all day long, wouldn't even hesitate. They fit my plan perfectly. Evil ones at work. No. Just everybody's got, if we all like the same stuff. Jen waits forever for the pullback to the area inside of triggers. Takes the perfect entry with the close above, and they stop her out. And it's not Jen's fault. Jen took the perfect trade. Sometimes they don't work. Sometimes they're not ideal. Sometimes it's not the best of the best. Or it is the best of the best, and it just doesn't go. Jen, outstanding trade. Nothing wrong with it. And then when it fails, they're like, Jen, we're so sorry. We're going to turn those triggers around. We're going to give you all that momentum. Why don't you grab a little momentum trade on the way down? Get your money back. There's always another trade coming. Nicely done. There's always another trade, guys. And when you believe that, Pete, what did we decide? 256 billion exchanged in these markets daily on average. When you know that the next one's coming, guys, it's easier to accept the fact that they don't all win. And sometimes they can't get their poop in a group. Sometimes they can't decide up or down. Sometimes they want to go up and the other guys want to go down. Sometimes they're caught between areas. And Jen says, this just isn't my money. I'm going to wait for the next one, the better one, the higher probability one. All right. You guys remember when I said I'd point out some crazy shit? Pardon my French, I'm sorry. This would be it. This is what we call testicular fortitude induced by a simulated environment. Or for you ladies, ovarian fortitude induced by a simulated environment. This is breaking your rules because you're bored. Your brain thinks it's rich. It's not. It's a termination. It's not a strong bottom because it didn't reach that divergence lower the fib. Directly into the termination. Cav, you also have the gap theory in play, which makes the mid-band a termination as well. You have divergence from a 1-to-1, which screws up great trades all day long. And Cav says, you know what? I've got enough momentum to give it a try. And I like this because I'm telling you, when you believe in momentum, when you believe that it's going to be hard to stop, when you see it on both charts, you might say, I'll take a chance. But he knows that it's aggressive. Look where he gets out. First sign of trouble. So I'm going to say Cav might have pulled one over in the big picture, but leaning on that momentum makes great things happen. Threading the needle. That's what I talk about when I say you're going to get to a different place. You're going to see that momentum and you're going to be like, whoa, I can make stuff happen. 3 triggers through. Jen tries the momentum trade, which is a quick snapback to the fib. It fails. She loses. She goes, but with 3 triggers through and a strong top, it's just a medium probability trend trade. Let me get back in and ride that mofo down to fibs. Beautiful job, Jen. Great recovery. The difference between new users and experienced users is Jen doesn't need 45 minutes to get over taking a loss. She is back in the game, gloves on, ready to fight instantly. Great work on that one. And I added in. You had a strong top here because the mid-band's a termination if the large triggers are a full bar away. And Jen, that's what made this one even more likely to win. Great job. This bar makes an area support 100%. Never get a full bar below, Jen, which means that it remains support, which means that that is a close above the triggers above support, which means you avoided a loss because you had a misunderstanding of the rule. Yay! That's what we call getting lucky, guys. Great job, Jen. But does it make sense? Because the full body of the bar never gets below. Can you guys hear me still? This area is still resist or support. 100%. Does that make sense, everybody? Resistance, 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 resistance. Still resistance. Now it's support. Nobody? All right, I'll just keep going. Triggers up. Room to trouble. Pull back to the area. Perfect entry. All the money. Victor, you and Miss Lucy took the exact same trade from the exact same spot with the exact same rules. Different parts of the world. Doing the exact same thing because the pattern is good. Jen, I'm not sure what's going on here. Triggers could go down if it continues down, may go up if they don't. Never get any closes on the correct side of the triggers. I'm not sure what the picture is. Triggers up, weak side, pulls back, closes above, out at trouble. No worries. Sometimes we just post them. You get bored. And guys, areas can create bounces. Victor knows this. And Victor, you said didn't manage correctly. Hit the first profit target, move to break even. Directly into trouble, Victor. Did you really manage it poorly? From the weak side of the triggers? With all the trouble in the way? Getting paid? Protecting your investment? Did you really manage it incorrectly? Or do you believe that you did because they hit your break-even stop? You should have left the 2 contracts? Why? You reached the thing that could create a bounce. You're on the week. Oh, should have closed the 2 contracts. Okay, that makes more sense. That makes more sense. Should have just gotten paid at the area, right? From the weak side. It's a big game changer when you guys learn how to take the money. Jen, looks like you got a little chili dog on the way down. Quick profits. I see that even if you don't show it. And then as it's pulling back, Jen says, my area is not inside of triggers. And after the fact, it looks like it is, guys. But in the moment, it was probably hovering above it. And Jen says, rule number 3 is not met. I choose not to enter, even though the large chart is sexy as all get out. And you avoid a loser, Jen. Great job. But I see you over here doing things, not talking about them. Mark sees all. And there's the same look, right? All the momentum, room to trouble, jump the fudge in, get paid at trouble. Absolutely beautiful. Great job, Pete. One of the things you guys will notice is that the most successful traders in this room do the same darn thing. All their trades look the same. And when I say that, they came in and show this ridiculousness. Just kidding. All the momentum, potential to break. And Pete says, man, that's a lot of risk with only 2 triggers. Let me confirm it with an up bar. And then I'll just take quick $100 into trouble. And if trouble breaks, I'll just get back in and go again. Can you guys hear me? Give me a Y if you can hear me. If he comes back, we'll tell him, good job. Good job. It's not the perfect trade. I don't have to treat it like the perfect trade. Good job. All right, let's see what we're doing here. Trend trade up. Flat, lifeless triggers look like they're already pointing down. I have absolutely no idea. Price pulls back to the area. Trading directly into all the trouble I can find. And hell yeah, I made money. Wow, Victor. The trend is up. You have room here. You got nothing here. You are stacked. Stacked. Look at that. Directly into zones. Directly into mid bands. Darn near pointed down. I'm glad you made money on that one. Good job. Good job breaking your rules and finding profits. I hope it works long term. Pete, I was telling everybody how people do the exact same thing after a while, and then I said Pete comes in with this one that looks different. 2 triggers through, all the momentum, leaning on momentum, demanding momentum, insisting the market give momentum. And Pete says, you know what? It's not perfect. It's only 2 triggers through. This is my Pete voice. It sounds just like my regular voice. I know that's an area that could bounce the market, send it up, but it's not the perfect look, so I'm going to force confirmation. And when it confirms, I'm not rooting for home runs. This isn't the perfect trade. I'm just going to make some money, and then I'm going to wait for it to get better. And it does. It goes up, and it turns into the perfect momentum trade. And he's like, we'll just make a little more on the way to the fib. I was praising your ability to abandon the 10-tick ideology and to know what you're up against and be willing to get paid. Guys, if you're ever pissed off about making $225 over the course of a minute or two, congratulations. You're a solid trader. You know your plan works. Trend trade. Down, room to trouble, pulls back to the areas, close below. Oh my gosh. The perfect trade, Wayne. And it's so easy to read. Big huggy noise coming your way. Look at that, guys. The triggers are down. There's room to trouble. Wayne waits for the fight, doesn't jump in until his rules are met, and just rides it all the way down to trouble. Great job. Great job. That's a pattern you guys should learn. It seems to be pretty darn effective. Triggers are down. Pull back to the area. Close below. Let's see if it goes down. There you go. Still held, you notice, out at the 1-to-1s and outer bands. It came a little nervous after a close above the mid band, but held at 67, survived as planned. So, the only thing about this one, 10K, so the only thing about this one, 10K, is you traded directly into support, right? And look what support did to you. So the result is outstanding. But that support could have very easily ruined your day. And I'm not sure where your stop was, but I use pivot highs. And that's one that I might have had to take twice. Does that make sense? Yeah, but I don't know why 67. If you're, what, about 4 ticks above the pivot high? And it saved you. Awesome. Because when you're trading into areas, that bounce is possible, right? So it's still a great looking trade. Rule number 2 not met. Take and manage. Stop was in the right spot. And man, what a great hold. And just no reason to not get out at that much trouble at an outer band, right? Point of exhaustion, 1-to-1s, 2 times over, fib. Great job. Andy, have a good one, brother. Have a good one. Nice job, 10K. Did you know that you were trading into support? That would be the only question I could ask. And if you did, that's your choice. That's cool. I'm not the trade police. Stop made sense. Good job. I like it. Same pattern. Yeah. That is 100% support. Price is returning to that area. That area is support. Same way this support created that giant bounce, this support could have done the exact same thing. That's all. Triggers down, room to trouble, pulls back to the area, closes below, directly into trouble, pulls back again, closes below, directly into trouble. The zone wasn't there at the entry, so the trade makes sense, 100%. If the zone wasn't there, Paul, perfect. And it just goes, right? Great job. So 10K, you may not have had that zone there in the moment. Paul said that it wasn't there at the time of entry. He took the exact same trade you took, with the exact same pullback, with the exact same close below, and darn near with the exact same result. And man, if that zone wasn't there, even better. Great job, guys. Great job. Both of you taking the exact same trade because all the cool kids do it. Triggers up. Looks like clear path. Perfect entry. Money, money. Now, the only challenge with this one is 3 divergences in the same price zone. That's a termination. But with all that momentum and a clear path, take and manage. Great job. Great job. The originator, the chili dog, momentum. Ron, I'm going to use this as an example real quick. So guys, in the very beginning, when the earth is still warm, in order to have a clear path, 4 triggers must get beyond the area. If that zone was there, you would not have entered. Too obvious? I would hope so. But if I see the zone, you know that I have to bring it up, right? If I see the hickey on your neck, I got to assume you've been up to no good, not playing with a vacuum cleaner. So guys, initially 4 triggers through is what defines a clear path. This is 100%. Guys, that's getting all your moving averages above the trouble. Do you guys remember, and watch this, back a price clears trouble. I'm gonna speak Ron real quick. The price bar gets beyond the bouncy thing. That's what Ron learned as he was learning momentum and path. He goes, man, if decisions are made at these key areas and I have to wait for price to get to that decision-making zone, well, doesn't it stand to reason that when price gets beyond the decision-making zone, perhaps that zone's not quite as effective? Usually when that happens, 3 triggers. So he took the very basic lessons, turned it into some smarts, and he said, once price gets away from the decision-making zone, and both charts agree that we're screaming with nothing in the way, I'll jump in, I'll take profits, I'll get out, because base hits pay bills. Base hits pay bills, and that's about $110. And if you do that on 10 of them, that's $1,000. And guys, this is what we call the chili dog, excuse me. This was created by Ron after Ron learned the high probability trend trade, when he began to believe that these areas can create bounces, when he began to understand that momentum is hard to stop. This is a trade that is born out of momentum and path, and Ron, really nicely done. And the cool thing is Ron was nice enough to share that with everyone in this room. All of the whys, exactly what he does, so that you guys could recreate it should you see fit. Nicely done, Ron. He is a benevolent king. Whoops. All right, let's get rid of some of these. An expert in bounce. I see what you did there. You're welcome. And I like that you say that, Ron. I like that you say, I wouldn't have seen this if it weren't for the high probability trend trade. That's not me. The high probability trend trade isn't me. It's the hard work that you guys put into learning this pattern. And guys, just by default, you start to see other things. If I'm always focused on momentum, I start to see how momentum creates opportunity. If I'm focused on areas that can stop forward progress, I naturally begin to recognize what happens when they're no longer in play. And guys, it's that sort of study and that sort of push. Look at that, the exact same trade. It's that sort of understanding that creates opportunity. Who was this? Hold on. I don't recognize the annotations. Jeffrey Dean. Rocking the chili dog. Pretty cool, right? So Jeffrey Dean, can I give one little tidbit? One little thought process here. Why on earth, on God's green earth, are you still $480 worth of risk directly into something that could stop the market? Why on earth are you up almost $500 freaking dollars and willing to give $1,000 back? That would be the only thing I can point out. So one of the things about the chili dog is quick profits. Because guys, what does the market do? It goes up and it fights and hopefully resumes. And Jeffrey Dean, when you're taking these trades, these just jump the fudge in because it's screaming trades, this is where quick profits make sense. Because at any moment, that market could fight. At any moment, that market could pull back. This red line could stop everything. Okay, so if you're in a trade, stop doing notes. Finish the trade, guys. I love it. And we all take this picture because this picture feels awesome. Look at all the money I'm up. I can't wait to show the people in the room just how big it can be on a Thursday, right? I get it. Been there, done that. Snap pictures. If you go through my pictures, I've got 100 of them where I'm up $1,000 and didn't want to miss the Kodak moment, right? Manage your trades. But that's all. Miss Lucy, have a wonderful afternoon. I hope it's not goodbye forever. We'll see you tomorrow morning. Jeffrey, can we address the real problem with this picture, though? Like, can we just have a moment of honesty between one another in front of everybody? 33 degrees is no way to live your life, son. That is way too cold. That is way too cold, brother. Just kidding. Man, it's so awesome. Everything about it is awesome, but I feel compelled to have that conversation. And then, Jeffrey, have you ever had the lesson? Have you caught it in the room that this market will continue to go up until you get a bar that closes below those small triggers? So if you are looking for that big home run, you can literally chase a reversal bar marker for $500, $600, $700, $800 if it gives it. Was that crude oil? That was crude oil, right? Do I have crude oil up? Let's go see how far that one went. It'll be fun. So let me get that going. Awesome trade though. But I do like to talk about management opportunities when I see them. Good top, triggers down, all the momentum, pulls back to the area right at the top of the triggers, virtually no risk, and just boom, making money. Great job. Great job. Oh my gosh, 3 different people took the exact same trade, and then there we go. I don't even have to look. That trailing stop, right? Getting out. I love it. So Jeffrey, I hope you didn't give all 500 back if it came back, but that's a good example, right? Get paid and let that last one run and just chase that thing all the way up. Great job. I love that all 3 of you took the exact same trade. Oh, really? One going the other way? All the momentum, nothing in the way. Do it again. There might be something. There might be something to this trade, guys. Here, watch this. I'm all about gifts. I have none personally, so I'll give you the ones that I stole from Ron. For you guys that are like, wow, what a great trade on Ninja Trader, guess what? There it is. This was my study on the chili dog. I created a checklist for entry, but I didn't do it on my own. This is a community. Ron was nice enough, and he's given this to you guys in the room, to write exactly what has to happen, exactly where your targets go, exactly where your stops go to give you the highest chance of success and consistency. So giving back to the room, and guys, it's in the room now. I gave it to you. Use it if you want. Use it if you want. It's not a Nexgen trade, but I don't mind giving you guys the good stuff if I have it. Man, good stuff, y'all. And this is why, and guys, this is a great example. On those chili dog trades, why do you get paid fast? Because the market does this all day long. So when it's not quite the perfect trend trade, man, take it off in chunks. Good stuff. Great things. You guys are awesome. That's all the pictures. Victor, you bought a new account with Free resets and a few trades later. You passed it. Nicely done. Guys, that's what free reset day is. Over leverage and aggressive, right? Get it to semi-live and get back to your plan. Strong trending market. Waiting for the fight, getting in after the fight on the wrong side of the triggers with not much room to trouble. Still able to make a little money with it because it's a strong trending market. Right? Wrong side of the triggers for a jump the fudge in though, Pete. Wrong side of the triggers for a jump the fudge in. Telling you guys, when you get in below those triggers, you just don't know. You just don't know. Did you just show me your butt, Pete? Yeah, but you've got the reps to do it. Market is crazy. Already hit goal for my semi-live account. Done for the day. Wait to see if there's one more craziness later for another trade. Other than that, paper it is. I like it. Guys, if the market's doing crazy things, not trending, right? Look at that sell-off. Holy wow. And after all that sell-off, now we're just kind of caught, right? Now they're catching their breath and they're trying to figure it out. All right, we got about 30 minutes left in the day, guys. I chose not to take a break because I am going to shut it down a little early. All the momentum, 3 triggers through, pull back to the area inside of triggers, giddy up, get paid, baby. That's what I'm talking about. Great entries create very manageable trades. Nicely done, Cav. Nicely done. But not a clear path because you've got a divergence high right there. You've got the potential to break. You've got 3 triggers through. Does that make sense, Cav? And if you were following the KISS plan, which I know you're not, but if you were, this week bottom, that divergence, only those 3 triggers, this is a pattern that typically loses more than it wins. Just wanted to point that out. So if you're following the KISS plan, ladies and gentlemen, this isn't your trade. If you got some reps, you're consistent, you're doing good things, that's probably going to be your trade. All the momentum, nothing to do, jump in, get out. I mean, come on, Ron. Everything says down, nothing in the way, jump in, pay out. Time to make the donuts. What is that, 5 or 6 today so far, Ron? 5 or 6? Do you guys want to see something amazing? Unbelievable? Stupendous? Phenomenal? Grab your adjectives, guys. Did you know that if you make $110 per trade and you find a way to do that 6 times a day, and you do that every day, never taking more than 11 ticks over the course of a trading year, life's pretty good. 6. So there we go. Is there anybody that thought you could make $166,000 a year never taking more than $110? Well, I'll say 112 because you trade the ES as well. Did you guys know that you don't have to be in every move, that you don't have to be the first one in, you don't have to be the last one out, you don't have to fight triggers or trade into areas? Guys, you have the greatest software on the planet that lets you know when there's nothing in the way to create a bounce. The greatest software on the planet that lets you know when the market's going to be hard to stop. In a market that trades billions, find the easiest path to your goals. We all have big old honking egos though, right? We all have big old honking egos. All right, so Michelle, what? We're not annotating anymore? Triggers are down. Momentum is strong. Path is clear. Entry is perfect. Profits were taken. Break even on the second. Why is it a bad entry? You enter just below the area inside of triggers. It's the perfect entry. What's wrong with it? What on earth does your plan say that mine doesn't? It's the perfect trade. I mean, the perfect trade. Wrong pick. Yeah, that's like, oops, did I send that one? Talk about what you're doing, though, Michelle, as you work your way back into consistency. I want to see your read. I want to hear about your momentum. I want to know why you entered where you did. And it's not for me. What you're doing is you're reinforcing that the plan works. And when you say this fits my plan and you see results from it, things are good. Things are good. The annotations aren't for me, my friends. The annotations are for you guys. That was momentum and path. That was a pullback to the area inside of triggers. I bet Pete's still counting his money on that one. Let's see the one that wasn't as much fun, or that wasn't the right one. Always, Michelle? That's a very definite word. Always is all-encompassing. It means that never under any circumstances do your trend trades go the distance. Is that the word that you want to present? Always seems to be break even? Is that like when I always leave the cabinet open? I always run the dishwasher and don't unload it? Those are relationship damaging. Sometimes they don't go, right? Sometimes they do. But Michelle, are you upset making $100 on a trade that failed? And Aaron, this is perfect, brother. The first entry was the better entry. After the second higher divergence, when you grow with the software a little bit, you may wait for a reversal bar to get in. But it's the perfect entry. It's the ideal large chart. Everything about this makes sense. They just did you wrong. It missed you with the first one. Oh, that's frustrating. Been there, done that one. But dude, it's perfect. I can't find anything wrong with it. Great trades will fail from time to time. It's just a fact of life. But the victory and the, oh, thanks, Cav. Have a good one. The victory is that you followed your plan perfectly. That you said this is a pattern that wins more than it loses. I'm going to let probabilities in to do the work. It's a great trade. I'd take it all day. Triggers are down. Small triggers roll. Pulls back to resistance. Closes below. In at 20. Out at 87 at the first sign of trouble. Paul, like a rock star. You could present this in a court of law. And look at that exit. So Aaron, with the second divergence, I should rather stay out of the trade. It usually doesn't print as divergence for a few bars. It takes 2.5 bars. It takes 2.5 bars to print. Ron taught you that, Paul? So Aaron, there you go, Miss Trina. See how I did that though? Just, oh sorry, you want NASDAQ? That's my NASDAQ. You can have it. Ta-da, look at that, I'm reading your mind. So Aaron, let's answer that in two ways. Cool. So if I'm on the KISS plan, right, and I'm learning to control my emotions, and I'm learning to be very mechanical, and I'm learning to not insert opinion. The management's very specific, right? It's super specific. It doesn't leave any wiggle room at all. So, guys, if you're in the very beginning, this is your core, right? Michelle, this is your core. This is your let's make it pragmatic. Now, when you know what you're getting into, guys, when you no longer say, oh shit, I think it's a trade, but when you can look at your chart and say, this is a high probability trend trade. This is the best of the best. This is the highest probability. In the very beginning, my management plan is that. That's it. It's 100% if then. It either happens or it doesn't, right, Michelle? Which means sometimes you get hit with break even. Aaron, it means sometimes it goes to your stop where the market shouldn't go. But you're super mechanical and you're just learning how to have an escape plan before it's actually needed. Does that make sense? There's the first part of it. Once you can execute this, my friends, you will begin to see things that you may choose to use for management. So Aaron, you may begin to recognize this pattern. I will, Ron. Take care, bud. I'll see you in the morning. You may start saying, you know what? Second lower divergence can mess up my good time. Second lower divergence can create a higher push. Second lower divergence, while it probably may not kill the trade, it might just push it a little bit further than I want it to. So some of you guys, you know I've got something for it, might say, if a second lower divergence prints, I'll exit my trade. But if it gives me a reversal bar, I'm getting back in as long as the large chart hasn't changed. So let's go to your picture again, Aaron, because it's a great look. So Michelle, you could have used this. Let's show both options. Michelle got hit here and took profits. So Michelle, when this divergence prints from 71, we know about it right about there, which means instead of break even, you got a couple extra ticks on the trade. It's the exact same trade you took, my love. 100%. It's the exact same trade that you showed me in the room. You took the trade, you got paid, and what I'm saying is instead of getting out at 74.75, there may have been an opportunity to get out at 73.75, extra 50 bucks in your wallet. But since you're learning how to get back to mechanics, right, to not overthink it, you just let it go to break even. I think that's a great thing to do. And then Aaron, you may say, using the exact same pattern, because I'm not in yet, I can't exit my trade with a second divergence, but if that second divergence prints, I'll wait for a reversal bar from that area before I enter, because it could push higher, and it did. Does that make sense, Aaron? So right now, man, we're being super mechanical, doing our best to just focus on the rules with the understanding that suddenly $100 trades might turn into $120 trades, right? And just a little bit more before the failure. And your perfect entry with the perfect large chart, there might be things that you see that say, you know what? I'm going to pump the brakes just for a minute. But I'm not lying, Aaron, and you talked about the speed of the market. Until you can read the market so fast that it's almost like you don't think about it, the mechanical approach makes sense, right? And then you present it, and we just have that conversation, and eventually the conversations that we have turn into action. So I think you did everything right on this one, 100%. And there's nothing that I can say about it that would even suggest for a moment that you didn't follow the KISS plan perfectly. Good job. 4 triggers through, no momentum, no areas inside of triggers. So Michelle, let's do this. Do you have a checklist for entry? And again, guys, I'm not the trade police. I don't want to be. Have no desire to be. But if this is the perfect trade, and we talked about this earlier today, you're trying to learn the KISS. Well, doesn't it make sense that if I'm trying to learn a plan, that I have the checklist in front of me to make sure that I'm following the rules? Maybe, possibly. I know we're all smart. I don't need no stinking checklist. I know these rules. Well, Michelle, let me show you. There is no momentum, and that is gone. There is a clear path. I won't argue with you a bit. But Michelle, there's no areas inside of those triggers. 66% of the very core, basic KISS, best of the best things are missing. The only thing you have working for you there is a clear path. Does that make sense? So why do we go back to the checklist? Why do we go back to the core concepts? Why do we always speak in terms of those three easy to define, 100% non-negotiable black and white advantages? Because when 66% of them go away, we can choose not to take that trade. Does that make sense, Michelle? I love these pictures. I love these pictures, guys, because it's this one just silly little conversation that can change the whole dynamic of your world. There's an amazing human being that shows up in here, Miss Kathy. In every trade that Miss Kathy shows in this room, she pastes this into it. And she takes her shape and she will literally say, Mark, I had momentum and my path was clear. And she'll block out if something is missing. And guys, one of the things that y'all can do, and I've said this only about 37 million times, is you guys could take this picture and print it out and put it on your desktop as you're learning the KISS plan, as you're trying to follow those rules, and then cut 3 pieces of paper. Right? So I've got the picture on my desktop, and I have 3 pieces of paper on my desktop as well. And I look to my chart and I say, do I have momentum? And it's either yes or no. And if it's no, I will visually eliminate that advantage from my sight. I'm beginning to say to myself, uh-oh, things aren't perfect, right? And then I'll go to clear path because maybe it's going to be a medium probability trade. And if I don't have a clear path, I will visually remove that advantage from my sight. I'm training my brain to lean on these things, to insist on these things, to demand that these things are good for me. And what happens is if you guys go through this process of allowing every trade to go back to the good stuff, you literally do, Michelle, stop taking trades like this because you've told yourself before the entry that it's not perfect, because you've walked through the rules and your understanding of the rules. And this only works, and this is for everybody in the room, this only works if you can actually define momentum. And it only works if you're capable of defining a termination condition. And it can't be effective if you can't define the perfect entry. So we learn the very basics first. That foundation, that core. And guys, I shit you not, from those 3 things, greatness comes your way. You're welcome. And Michelle, you're brave for posting a loser in the room, and a lot of people won't do that. A lot of people won't post a loser in the room. They would rather hide it and hope for the best. Let's share this one real quick. Guys, the market is never against you. It doesn't know you exist. It's our impatience that turns opportunity into self-destruction. I love this picture. I love this picture. I have lived this picture. Remember that we're passengers. We're just riding along and hoping that the market gives us opportunity. The triggers are down. There's a lot of room to trouble, But on my small chart, there was no room to trouble. And look at that. No room to trouble is creating a bounce. Let it be black and white in the beginning. I don't have momentum, but all my triggers are above, which means that if I thought I was going to go short, guess what? I just got my ass kicked because I didn't have momentum to push it, and I didn't have a clear path because all my triggers were above the fib. Pretty cool, right? Goes back to the three things. I don't have separation, therefore I don't have momentum. They're trying, but I also don't have any triggers beyond the divergence high. So no momentum, no clear path. There will become a point where you don't care about that midband inside of triggers, where you simply say, even if it goes up, it has to go up without me because none of my rules are met. My large chart said, don't even go look. Does that make sense? And they may push. So right here, what I say is, well, come on, push. Build that momentum, right? Get me above this trouble. Then I'll look for my entry. Because that right there is more likely to happen than a winner. Pretty cool, right? That was live right in front of you guys. I talked about three things. I only had one, and I chose not to take the trade. Pretty cool, right? I talked about three things. I only had one. I chose not to take the trade. And Michelle, I know that I make this sound super like, oh, that sounds so easy, right? And it's not obvious in the beginning. You've got to do some work to get to this point. When I first started with the software, John Novak used to always say, it's obvious, it's obvious, it's obvious that you shouldn't take this trade. No, it's not. I'm excited. I want to be in a trade, right? It's not obvious. But if I learn three things, if I talk these out loud every time, it does become obvious. If I know that my trades are a pattern that require three things to give me the highest chance of success, it does become obvious. But it's not there in the beginning, guys. It takes a while to get there. And then once it's obvious, then you got to learn how to trust it. And I'm going to say one more thing about it. If you're in the process of learning trust and you take this trade and you lose this trade and you don't post it in the room, and guys, is anyone other than me say, hold on, let's do it this way. I keep taking the perfect trades and keep losing, and there must be something wrong with this software or plan or mark or Mercury and retrograde, full moon. No way it could be me. Anyone other than me ever done that? There's no way it could be me making a mistake. There's no way it could be me breaking rules. There's no way. Because look, guys, my triggers were green. I have momentum. And I've got room to trouble. There's no terminations. Guys, I'm telling you, I lived my life like this until I started posting in the room and got just a little feedback. And what I realized is that the software is beautiful and that the plan is remarkable. And Mark is a lot of fun at a party. And Mercury in retrograde has nothing to do with me, right? The full moon. So when you say to yourself, I think it is, right? Michelle, we do the list all the time. If I say but, I know that I'm breaking my rules and it's probably not a good trade. If I say should, will, has to, or worst of all, hope, I'm probably not taking the right trades. Funny picture this morning that we did, and I took the loser on purpose. I know the smalls are not below the large. That's the rule to catch an edge from a pattern. I know the smalls are not below the large, but I showed my butt. And then the next picture that I took is that trade losing because your butt is full of shit. And that was kind of a funny play on words, right? So Look at that. And now they're just scrambling. So one of the things, and I don't know if Jen's still in the room, I think she is, but one of the things that Jen does that's absolutely brilliant is when Jen's rules aren't met, instead of taking the trade, she'll take the picture and annotate the chart on why she chooses not to take the trade. She's like, oh my gosh, it almost looks perfect. Things are so close. Life is almost everything that I need it to be on this trade, but one of my rules isn't met. And because it's not met, instead of pulling the trigger and entering the trade and hoping for the best, and I'm scrolling up right now, Jen, trying to get to it, Jen simply says, my area is not inside of triggers. I'm not going to take this trade. I'm going to avoid that loser. That's not easy to do. Good stuff. Paul, you did one time and then realized people have made and are making fortunes with this awesome software. Reluctantly started posting. Slowly you started posting more winners than losers. And Paul, you know exactly what the patterns are. You know exactly what the rules are. And now we're working through not accidentally breaking them. Because when we're new, we will accidentally break rules a lot. And it's not malice or defiance or anything like that. I'm just trying to get all this stuff second nature so I can make good decisions in the moment. So Paul, you're at that point where you did finally settle down. And now it's all coming together. Awesome, Papa. I got you. And then guys, this is probably going to be the end of the class. So let's see if we can get some lessons on this one. I got to get in the car and drive for 6 hours. So good timing, Papa. You almost missed out today. But I got you. Triggers are down. Clear path. Pull back to the one-to-ones. Price closes below the smalls. And it got you. So Papa, does it fit the rules 100%? Pull back to the area, close below. The question that you have to ask yourself is that if your entry is at 02 and your stop belongs 20 points above it, that's a lot. That's 400 a contract, right? Fits the rules perfect. Fits the rules perfect. The only thing that I can say is here's your fight. Here's your failure. Your stop makes sense. Well, I can't define that. You have to. But check it out. There's another fight. There's another failure. You could at least slide your stop in a little bit, and it looks like you kept it up around 17. So the next fight and failure, Papa, that's a good place for the stop. And then you would have been hit, and it saves you a couple points, right? Me personally, I don't care for 200 plus on a contract. I feel like it's too easy. So if it hits and just blasts like that, it's just not my trade. And everybody has to make that decision for themselves. Did they come back? We'll see. Did they give it up here? Maybe not. Triggers up. Clear path. No area. There is no area. Price didn't pull back to the HVA. That HVA wasn't created, Papa, until this bar closed. So what you did is you said, oh no, it's going without me, and jumped in. That's it. And it went. Does that make sense? It's not a trend trade. You don't have an area. The HVA wasn't there. It was nothing more than a close above triggers. That's all it was. Does that make sense? Not knocking you. I'm just saying it didn't fit the rules. And I know that you're trying to get those rules down. Triggers up, nothing in the way. Still didn't make the area. So the close above doesn't fit the rules. And it works, right? It works. But no areas. So we're leaving that third rule out of the equation quite a bit. And Papa, one thing that you haven't done recently is leave that third rule out of the equation. So I don't call you out and say you're doing it wrong, but I do say that you've changed your plan. You've changed the plan that's been producing a lot of winners lately, and now you're just tired of waiting, and you're eliminating the third rule. And I don't know if this is a habit that you're building, but because I see it, I do want to point it out. Price broke resistance, pulls back, does close above, and that one just didn't work. And you know what, Papa? That one fits the rules. 100%. Resistance became support, and I don't think you're the only person that lost this trade today. Fits the rules 100%. Failed miserably. That happens. But you read everything 100% right. It just didn't work. And then there's the easy one, right, Papa? Pulls back to support, closes above, and it's like playing with puppies in the park. So one of the things that you guys are going to have to go through is believing that this happens enough to pay your bills. And then the second thing is believing that if they didn't make that area, there's a really good chance that they're going to. And when you start jumping in the middle of nowhere, and you got away with it twice, brother, especially when you get away with it twice, you start building that habit and you stop letting something bouncy get you in the direction of your trade. Triggers are flat. It does pull back to support. It does close above. And you do get stopped out. And it just didn't work. And then, Papa, the one thing that you can notice on this is it already hit its target, right? So it had already been there. And it bounced off support and couldn't go. And it bounced off support and couldn't go. And it bounced off that mid-band again and couldn't go. And it bounced again and couldn't go. And you notice those large triggers never even hint that they want to go up. So from this entry right here, stop makes perfect sense. Small loss just didn't work. It's the right look, but it had already reached its target. It had already gotten there. And you're right, those triggers, they could have been up or they could have gone down. You can always wait a minute and see. And then pull back to support, close above, doesn't work. And then there's those flat triggers again. Great lessons in here, Papa. And guys, I'm going to tell you right now, when you do that self-analysis, triggers weren't up, they were flat, maybe I should have waited. Triggers weren't up, they were flat, maybe I should have waited. What you're doing, Papa, is you're saying, wait a minute, that's not my best look. This look doesn't really have any push to it. The people in charge can't figure out what the hell they're doing. Why am I trying to take the perfect entry with the imperfect large chart? And your self-analysis is spot on. And that's what makes great traders, guys, is going back and be willing to say, hey, there could have been something wrong. Let me go look and see if I can find it. Let me post it in the room and see if Mark can help me find it. So, great job. Oh, I'll be back tomorrow, Paul. But guys, we're going to call it. I'm going to look at that. That's ugly, isn't it? We're going to call it today. I'm going to give you guys today's video.